Okay everybody, welcome in to another live session with LAGFX. So today, obviously as it is Monday, markets are open now, so we're actually going to be running through some live market analysis and seeing how the markets have changed since market open, and then using that information to decide and decipher how it is we're actually going to tackle this market in the coming week, and potentially how we will take trades today given how the market plays out. So let's just switch the scene over so we can actually see the market and we can get going. So here, the very first thing I opened up to was XAU USD. So we can pretty clearly see now at this point that the market since open, now if we find exactly where that was, it was down here. So we've had price trade up. We've had it react to something up in this region. We've then seen the market start to curve off. And if we actually follow the fractal bullishness of what's gone on here, we can see that a protected low has been broken. Therefore, we have had a break of structure to the downside, which is obviously going to be relevant to us because that is a good sign of a continuation to the downside, and a good sign that the market is now going to go bearish for some time to come. So If we really look inside of this, can we argue that the market's reacted to anything? Well, we have quite a clear buy to sell candle there. Is this what price has reacted to? It would appear so. So we have that as a point of interest supply. Obviously, price could have also reacted to something down inside of this region. I probably would have had this region identified as a whole, where we can see we did potentially get a slight reaction, but obviously we just had bullish structure trading up. Nothing too clear, nothing too obvious. Now, obviously we now see that price has reacted to this upper zone. We've had that break of structure. So if we were to then identify this as an impulsive wave, perfect. We then go to a low enough time frame within which we can look inside of that. Okay, and then we try to identify any points of interest that price may decide that it wants to react to. So we obviously have a buy to sell candle in here, but we can see that that has already been mitigated. It appears like we have something inside of this region where we can see that we have a buy to sell with some market inefficiency after the fact. Yet price taps us back up into there, taps us back into there. So I believe that zone as well as the zone up here are the only two regions that I would argue remain unmitigated, and therefore if we are seeing a correctional wave, we would want to see price reacting from one of those. Now, if we go to a slightly lower time frame, we can really refine exactly where that buy candle is, where it happens to be right there. We go to the 1 minute and watch how price reacted as we entered. Okay, we've got clear bullish structure here trading us in. We see that we instantly have hesitation and a reaction from the zone. The second we break this low, we are signifying a break of structure. So once we had price fall through there, that's the break of structure delivered. We then would have looked inside of that and said, right, well, we have a buy to sell candle here. We've then seen price come back up, react to that. Therefore, a potential entry could have been found right at this region. I probably would have put my stop loss above here, if I'm being completely honest, just to be safe. But take profit then all the way down at this low, if not all the way down at the demand zone that we're hoping to see price tap and react to. Therefore, that is a pretty nice potential entry that could have been found around about an hour ago in this market. But if that was missed, which it may very well have been, we can then look at this buy to sell that has been left over. We'll set an alert there. Okay, we will spread this out on the off chance that price now trades us back up to this, where we will see a mitigation and then hopefully manage to get another entry in the market from that point. But we will keep this on our chart just so we know exactly what's going on. We will signify the fact that we would want to take a partial at that level, which we will do with that line, and therefore we will know, and we'll set an alert there, what price is doing and how it is reacting. So pretty much the bias as of right now is, considering the bearishness that is emerging as of recent, you know, within these last few hours, we can expect that price is obviously going to have a move lower. Now, obviously going to see that after we had some breaks of structure in the market, or after this break of structure here, we are seeing this as impulse correction. The next impulse should now come to penetrate this low, and therefore I'm making the assumption that that penetration is going to lead to price pulling back, reacting to either one or two of these demand zones, before then getting ready to make its next move higher and continue bullishness for some time to come. So that is a pretty nice entry that could have been found there in the market. I mean, we've just ran through exactly how we could have found it, and the potential it has as a 30 IRR trade, given price does play out how we would like. Now, we can already see price is starting to reject as it's come lower. You know, we have liquidated some of these regions. We've now delivered that major break of structure, and now we're getting some hesitation of a move lower. Now, this could either just be a simple redistribution in forms of the fact that we are just consolidating for a while before then making the next move lower, or we simply just need to deliver a slightly bigger correctional wave, which I am hoping will trade us into this zone right here, where we have the alert, where we will expect to potentially find an entry given that correct entry confirmation is delivered in this market. So we have the alert set at relevant points. All we can really do now is just leave the market and come back to it when one of those alerts is pinged. Euro USD now, let's look inside of here. Okay, so I was hoping that we might potentially see a reaction from this region where we see price did hold within this point of interest, this demand zone, for a little bit of time. Now, unfortunately, we haven't actually seen the reaction from that point. But what we have seen is that since market open, yes, we've come through, we have slightly liquidated that region. However, if we look now, we've seen that a break of structure has been delivered anyways. Now, obviously, this could simply have the purpose of trading us up into a supply zone before coming lower. But if we're realistic and we actually look inside of this region, I don't believe there is any regions that would act as an area of supply. Now, the one thing that stuck out to me was this buy candle right here. We see that this wick has already come to mitigate that, and therefore, I wouldn't actually expect to see price reversing from this region on account of that. Now, there's the off chance that price may come up and react to something inside of here, although that is very likely for it to come so far up to pretty much create an equal high before then choosing that as its reversal point. I believe that is very unlikely. So I'm thinking and assuming that this move is an indication that further bullishness is going to happen. So that is definitely something to be wary of. Although it is confusing, you know, price hasn't come down and reversed and reacted to a proper demand zone. That's fine. We've still had the break structure to the upside. If we sort of analyze what price has done in this region, we can see that this should have been a protected high. So we've had the break of structure there. This is no longer going to be relevant. After we had that break of structure, price then came to tap into our overall sell to buy region, therefore reacting from demand. Then made its next move higher, came back down into the sell to buy region. So clearly giving indications that demand has taken over in this reversal point. Now I'm going to hope that that then sustains the further move higher and continuation higher. If not, obviously because we've now liquidated that zone, we would expect to see price potentially reverse down here before giving us a more major reaction. So in terms of this market now, my two relevant alerts are going to be set at this zone on the off chance we get price pulling back and reacting from that. And also we're going to want to have price, or an alert, sorry, at this point, so that when we penetrate this high, we know that we are creating new structure and we can start then looking inside of that. Now, if price does come lower, it's going to be very hard to identify whether it's coming lower to react to demand or coming lower to actually create a new bearish impulse. That is going to be unclear, hence why I'm not now looking inside of this region, trying to identify demand zones to then get involved with, because there is not clear enough of a bias on either side for me to be able to make the assumption that that would be correct, which is exactly why I'm not going to identify that, and instead I'm quite simply going to have my alert set at both of these regions and wait for the tap or the penetration of one of those levels, so I know exactly what I'm tackling. Now, given that we do find an entry, let's say from this one, or price penetrates at high, we get the pullback and get an entry further. Of course, I'm then looking to hold that position up until this supply zone, because our higher time frame bias is for price to tap this supply zone, find that reversal, find that creation of a white coffee and distribution, the break of structure to the downside, and then we would be looking to edge in on sell positions, which is obviously why we'd be looking to close out on any buys at this point, so that we're not contradicting ourselves and we don't have positions on both sides. So not much we can do on this market, unfortunately. That is also going to be a waiting game. Let's head on over to Australian dollar to the US dollar. Now, as of last week, I was watching price tapping into this zone, seeing that as quite relevant because I've been waiting for that for some time. Now, we've had the overall reaction from a 1 day zone, which is going to be relevant within itself, where we can see we identified this supply zone up here. Excuse me. where we identified the fact that price it's working within this 1 day impulse. We know quite clearly we are being delivered with a correctional wave, which is good because we know that that is meaning we are getting close to finding entries on the sell side, which is relevant to us because this market is bearish. Obviously, if we get involved in sells, they could potentially be profitable longer term. Now, price has traded us into this overall buy and sell region, or this supply zone or order block, whatever it is you know it as. We see quite a decent, in my eyes, institutionalized reversal where we've seen a clear distribution, liquidity built, liquidity cleared, delivered through a fake out and liquidation of those highs. We've then seen price starting to react to last points of supply, then get delivered with the break of structure to the downside. Once that happened, we identified 2 supply zones in the market. We see that we did gain a reaction from the first, where again we were delivered with signs of a proper distribution. Liquidity built, liquidity cleared, break of structure. I was then looking inside of this region for entries. An entry was delivered, a partial was taken. A few more entries were actually delivered inside of here, so quite a lot of partial potential there. And then we see prices now broken structure to the upside. We traded bullish for some time until we reached this region where we've now tapped the upper of the 2 zones. And we're seeing a lot of hesitation in this region, which is going to be very relevant because, again, we're looking for a Wyckoff distribution. Now, what I like about this is we have created liquidity at this level in the market. We have cleared that liquidity. We have delivered a slight fake out. We then come back in, reacted to what was support as resistance, traded down. We've then come up, and it looks like we've potentially come up with the purpose of mitigating the last buy to sell in this region. Okay, we've had the tap of that. We're now heading lower. I believe we have just penetrated the low. So we know that after the liquidation, we are seeing clear bearish structure emerge. Now, I would arguably like to wait for a proper break of structure, which would have to be the break of this low. However, we see that if that news had not come out and had not been delivered, and let's just ignore that for 1 second, the proper break of structure would need to be at this level here. So if we start seeing price continue this bearishness, now the reason why I'm not instantly trying to jump on anything here is because of the fact that we're not seeing too much volume and volatility to the downside. Now, typically, when we're getting a major tap and reaction from a zone like this, we want to see volume and volatility introduced almost immediately. Now, the mitigation of this zone should instantly be introducing enough supply to cause some major moves lower. We see, though, that after we've had the proper liquidation and mitigation of the zone, yes, we've had bearish structure emerging, but the correction waves are still very deep, and the moves lower are not created with the highest of volume. So I need a little bit more confirmation that price is wanting to make moves to the downside, which would be from A, a break of structure, or B, just more volume and spread in the candles that are being created on the bearish side. Now, again, this is just going to be a waiting game, hence why I have the alert set here. If that is penetrated, we can then start looking at supply zones to potentially sell from, or we have the alert at this high, in which case, if that high is broken, we then know price is invalidating this setup, and we can then look elsewhere. It's worth noting that I believe price has actually come up to mitigate the overall refined region of this zone. Now, this is typically what we see, and this is typically what happens within a distribution. Now, we can either take the overall zone, which would be this entire region, or we can take the refined proper buy to sell, which of course would be refined from all of this distance, and we can identify the both of those to that right there. Now, what typically happens, and the reason why the upthrust is created, is not only because it is A, liquidating this region, B, giving the institutions the best possible price for sells, but also C, it usually brings price to deliver a more full mitigation of all of the refined regions inside of this overall buy to sell. So what we can see here is we have been delivered with all 3 steps that we would need within the 3-box strategy, where we've had an impulsive wave, we've had a point of interest that has been tapped, and we're now seeing the creation of a Wyckoff schematic. So there we have 1, 2, 3. Now, my biggest piece of advice to anybody who implements a 3-box strategy is that we should always look for 2 sets of the 3-step approach for entry confirmation. So let's say that's one set, 1 impulse, 1 point of interest, 1 Wyckoff schematic. Okay, that's going to be 1 set. Now, what we can see is, can we gain that again? Now, what I would want to see before I was doing this is a break of structure. But let's just assume that price broke structure on this move lower. We would then take that as an impulsive wave, and the reason why we could have taken that as an impulsive wave given a break of structure was delivered is because we know that once a break of structure is delivered, we are creating an impulsive wave on the side of that break. Because as of right now, we are technically still bullish with this as an impulse, therefore this is still technically a correctional wave within bullishness and not an impulsive wave within bearishness. However, let's just say that we saw this delivered. We've had 1 impulsive wave, 2 point of interest, and then 3, we would have to find some form of a Wyckoff schematic. Now that could be identified within this entire region itself, where we have been delivered with liquidity built, liquidity cleared, a fake out, and then a break of structure to the downside, in which case we may then get involved the second the break of structure is delivered. But I can pretty much tell already that's going to be way too much of an unrefined zone with a stop loss of 33 pips. So we may then decide to gain another set even further. Because of the fact that we have been delivered with a break of structure here, that is going to be confirmation to us that this move lower is an impulse on the bearish side. Not a displacement, a break of structure. So what we would therefore do is gain that further 3-box strategy. Okay, it's not going to quite let me because it's on the outside. Here we go. We would take this as an impulsive wave. That's 1. Looking inside of this impulsive wave now, which I'm going to do so on a lower time frame to try and find exactly where is relevant. Well, I know for a fact that this appears to remain unmitigated. We'll go even lower and try to refine that further, because it's actually quite unclear whether or not this has been mitigated already. I would say that price has already mitigated that, as a matter of fact. So let's just continue to follow price down. We tap back into there, we tap back into there. Okay, one region I'm defo liking is this little buy to sell right there. We'll take that as a supply zone or a point of interest. Okay, now if we analyze this further, it seems like the market has been pretty efficient for us at this point. So honestly, the only points of interest I can seem to identify, okay, maybe if we go lower, this will help us further. I think I would like to also say that this right here, if I can try to find the exact region of that, may also represent an unmitigated order. So there's no clear supply zone inside of this. These aren't the absolute best. However, they still represent zones nonetheless. So you can see what we've done here is, in order to try and refine that position, because we were unhappy with the fact that with our second set of the 3 boxes, our stop loss was still not refined enough, our entry was still not refined enough. So what we can do is then gain a further set of the 3 boxes, as we have done. As we can see now, we've got this of impulsive wave, points of interest, and now it's simply going to be a waiting game to see if price does trade us up into one of these zones, and if we gain a reaction. If so, obviously then we'd be looking for an entry. Now this has cluttered my chart quite a lot, and therefore I am going to remove these, as I already know what's going on here, and I don't need to keep it all written on. Same with all of this. This can all go now. I know what's happened. I know that price has been reacting to that. I know we've had a break to the downside. Obviously all of these can also go. I do like to keep my positions on the market just so that I can see, looking back, where I entered and why. But pretty much everything else inside of there can go, as it is simply just cluttering our chat. Okay, So that cleans things up a little bit. And now we can see a bit more clearly that there is definitely something nice happening inside of this market. Where we were once bullish, we can see that we've had a break of structure, because technically in bullishness, we've had impulse to this point, a correction. The new impulse comes to penetrate this high. We've broken structure. We've then made the move lower. We've had a correctional wave come back up, which has failed to penetrate the market high, which is therefore an indication that it wants to hold that high, which is an indication, of course, that bearish structure is emerging. And the reason why this is good is because we're also seeing some form of a institutional reaction inside of this region to a point of interest representing a buy to sell. Now, as we decipher that and look inside of it, we can see that after we've had the liquidity clearance and the overall zone tap, we've then had signs of bearishness to the downside, where we've had a reaction to a supply zone, some form of institutional control. We've then had this move low, which has come to break structure, therefore indicating that we are looking at a new bearish impulse. So from here, we want to see a further reaction to a supply zone. And if we gain that, we can then look at some entries in the market. Now, it's quite nice to see that at this point, where we were on the 1 minute and the 30-second refining these zones, refining these supply zones, as we now come on to the 15-minute, we can see that they do still appear to be very valid, where we can see using the wicks here, we have a clear buy to sell. We can also see here, we have a clear buy to sell. So both of these do look very relevant to me. And we can even just move those zones slightly higher so we know exactly why we identified them. Obviously, the structure inside of here is not the most efficient. We could also argue that there is a zone inside of there, so there is a few regions that price could reverse from, which isn't always great because it pretty much means that you're just guessing yourself, and it's hard to know exactly where price will react from. But we've identified these nonetheless, and we will be waiting to see what price does. Now, this is also where it can get very confusing, because now that we're not on the 1 minute or the 30-second time frame, the zones within which we'd want to identify change, because now this doesn't look like a nice zone. This also doesn't look like a nice zone. So this is why sometimes you have to be careful not to get too caught up on a range of time frames. We have definitely seen on this time frame that this is definitely not valid because structure is coming back up, returning to that region. This overall buy has been invalidated as we've dropped out, but this last full candle inside of there is still valid. As we come lower, again, we can see this comes up to mitigate that. There would have been a zone here, but we see prices already reacted from it. And all the way up here, we could be questioning this because where the real buy to sell starts, we do see price tapping in. Therefore, this is probably going to be less likely of a zone to hold than this one inside of here. So that is Australian dollar, US dollar. Let's now move on to a different market to see if we can provide any more analysis. So we've done gold, Euro USD, Australian dollar, US dollar. Let's head on over to the pound yen. Now, I have been struggling to catch some valid entries inside of this market because we have been trading bullish for some time now. We had an overall 1 day zone tap. From that point, we've had many reactions since. As we started breaking away from that zone, delivered that break structure, we had a few zone taps. Price took off. We delivered that first impulsive wave. The correctional wave you see was very misleading because of the fact that it came to react to every single one of the zones I had highlighted inside of this region, and we did deliver breaks of structure each time, which could have been very, very misleading for us. But we eventually saw a reaction from the lower of the 3 zones. Price has then taken off. We've had a lot of bullish momentum, but the 2 zones I identified, we see that price never fully pulled back into, and therefore we could never quite catch an entry. Now again, what I'm going to do inside of this market is just try and clean it up a little bit, because I don't like when my market starts to get cluttered. Now, of course, all of this analysis was relevant at the time to help me understand what price is doing, but now that price has already delivered the bias, it does become quite unnecessary for all of this to be on. So we'll clear this off. Okay. There we go. I'm going to keep these on just so I remember what the bias was. But for everything else, I just simply want the zones. Now, the fact that we haven't had the reaction to these and prices continued higher, let me just go back down to a 15-minute just to double check exactly what my bias was inside of these zones and double check that I do believe that they are valid. In all honesty, I don't actually like the look of this zone. It was a very refined zone, and I don't think we're going to get a reversal from that now because we have had the overall tap into there. That's mitigated. Again, this still doesn't look the greatest. I think the identification of those zones was simply me being forced to try and identify some entry point. So let's just look at the refined zones on this time frame. One that we can definitely now look at and say that we're confident with is going to be this right here. This is definitely an unmitigated region that I'm confident with and something I will happily leave on the chart as a demand zone. Okay, so we're going to set our alert at 166.78. I always draw this in so that whenever I update any of the clients in the Learning Lounge or in the VIP chat, they do know exactly what it is I'm looking at and know the exact region within which we are looking to find entries. Okay, but let's just follow structure. So we were consolidating for a while, so we didn't know what price was doing. The second we had this high volume push through, we instantly knew that that's going to be a break to the upside. Bullishness is going to emerge. We can then see, right, well, we have quite a clear sell to buy inside of this region, and we can even look to try and go to a lower time frame just to refine that. Yep, that's definitely a nice sell to buy that we would have had identified. Okay, well now let's look at the chart. Well, apart from when news came out and obviously caused this market to move in a very strange way, we follow structure, correction, impulse down, correction, impulse. Okay, so technically this should have been a protected high. So we had a break of structure. Okay, we've had liquidity built, liquidity cleared, break of structure delivered. The only downside here is, of course, the fact that news came out, caused a move in this market which would have been untradeable because we probably would have taken this as an impulse. How are we getting on, James? Hope you're okay. I'm doing good. Thank you very much. Doing pretty good on this Monday morning. No, it's not Monday morning, Monday evening. How are you? Okay, so I would have taken that as an impulsive wave. And looking inside of it, I mean, for any clear zones, I guess realistically, the only place we would have looked to identify was actually this sell to buy down here, because it's a clear sell to buy region, market inefficiency after fact, no structure returns. Now looking inside of here, this is all pretty efficient structure, nothing I would have identified. So arguably, yes, we did have this high volume spike, but it did actually come to react from that zone quite well. And let's say we had a pending order, which is something I don't do, but on the off chance we always would have had that below there, we would have accounted for a pip, 2 pips. I probably would have rounded that to 10 to satisfy my OCD. So potentially we would have found an entry there. We would have partialed there at 4RR. Okay, fair enough, fair enough. So yeah, we've had a tap there. Price is then taken off. This would have been our next impulsive wave. Okay, we would have looked inside of here. Let's just follow price. Now I was going to identify that, but price comes back down and taps that already. That mitigates that, which mitigates that. Moving up, okay. Potentially a sell to buy there. That's mitigated. So I think the only zones I probably would have identified on this time frame at least is this right there. POI demand. And then on top of that, let's just go to the lower time frame to try and find exactly inside of there where I want to look for. Probably would have been this right here. So we can actually see I probably wouldn't have found an entry from this pullback because the 2 zones I've identified, yes, we had a slight reaction from the first, but the second one No reaction from. We probably would have found the entry there, been stopped out, and it seems like price has reacted to this very small sell to buy inside of there, which is strange, and I definitely would not have found an entry inside of that, but that's absolutely fine. Anyway, price has played out since. We do not need to concern ourselves with all of this. Okay, we've seen price take off, so let's now try to identify the most recent impulse, which I would probably argue. Let me just gain a more clear look at this. It seems, honestly, like I'd be working within this move here. Now, I'm definitely getting too caught up on the lower time frames there, so let's just return to a 5 minute. Yep, I defo do like the look of that. Let's go to the 1 minute to identify a zone. And let's just follow price. It's been created. We've defo had a tap in there, slight liquidation, but a tap nonetheless. Now, honestly, what I would have identified inside of here is probably this zone all the way down here, and also a sell to buy inside of here. Okay, so price has arguably tapped us into this one already. We can even see on the 5 minute, yeah, that looks pretty valid. On the 3 minute again, looks pretty valid. Same again as down there. Okay, yeah, I'm definitely liking the look of this then. So now that price is holding within this zone, okay, we've had bearishness traders down, and technically we'd want to see this high held if we are remaining bearish. So therefore, if we come and break this high, what we then want to see is the break of this high. So if we use a brush tool, see price trade us through, break. We then want to see the pullback, that break of structures, showing signs that we want a liquidation to the upside. Now, when we're seeing that liquidation to the upside, it means that institutions are getting ready to start profiting from buy positions rather than sell positions. If we then gain the pullback into some form of a demand zone, reaction, continuation, that's then further signs that demand is taking over and that institutions are looking to profit from buys to the upside. Let's go off the brush tool. Okay, so loving the analysis as always, James. Thank you very much for that. I appreciate the continued support. I know I've seen you in the streams the last week, so very much appreciated. Again, if anyone has suggestions for markets they would like to see me take a look at, make sure to let me know. As of right now, we're just going to keep an eye on this right here to see what's going on. I do like the look of a potential reversal here. Now again, if we find an entry, let's just remember what our longer term bias is, and this is where we're really going to have to zoom out. For starters, we're wanting to see price come and liquidate this high to follow this bullishness that's emerging. So we firstly would probably want to look at partialing at this region. So let's just put that as liquidity, just so I know exactly what that level's referencing. But if we zoom out further, if I do manage to find a buy position, I'm more than likely going to try and hold that longer term until we gain the liquidation of this high up here. Now, I probably will only hold about 25% to 20% of the position on the off chance that price does come and liquidate that higher time frame high, but it's still allowing me to profit from those longer term moves, even if it is just a small portion of that position remaining. Just getting back to price as of right now. Now, what we can also look at is whether or not the strength of the pound is in our favor. So as of right now, I'm just going to have a quick look to see. No, that is still a week in advance. Bear with me, I'm just looking at a fundamental calendar. So we did have, there we go, some news this morning at 7 AM, GDP month on month, which is better than expected. So we have grown 0.5% as an economy. So therefore that is going to instill some confidence within the pound. So that is going to back this setup because of the fact that obviously with everything that's going on in the world, there's not been a lot of confidence in the economy. There's not been a lot of confidence in the people controlling the economy because of how much inflation is rising, interest rates are rising. Therefore, people are believing we're in a tough spot. So when we gain good news like that, in a bad period, that good news is going to have much more of an effect because people are really waiting for that good news to come to find those signs that the economy really isn't as bad as they think. So seeing that news, the gross domestic product month on month at 7 a.m, forecast 0.4%, actual 0.5%. So that's going to show some good growth. Now, we have to remember that last month, this was minus 0.6%. So we actually decreased as an economy last month. So therefore, going from minus 0.6% to 0.5% within a month is obviously very, very promising. Now, that's probably why we have seen continued strength within the pound. Also why we actually had this spike this morning at 7 a.m, which is strange because the spike was to the downside, even though the news was good for the pound. But nonetheless, we see that after that and since that, we have gained in this market alone 152 pips, or nearly 1% in the last 6 hours since that news. So using that sign of obvious bullishness with the market, I'm going to take that as a good sign that this trade could play out. Done all my Christmas shopping? No, I'm awful with that. I've left it all to the last minute, so obviously it's going to be stress induced when I get it done. You had a look at XAU USD, looking good for potential sales, just waiting on a penetration of a supply zone. I have highlighted, yep. We went through that at the very start. We can have a quick recap, to be fair, of what we were looking at. He did at the beginning of the stream. Yeah, we did have a look at this. We were looking inside of this entire region where we can see that price has actually reacted to a very small buy to sell candle up here, which is something I wasn't actually expecting. I believe that if price was going to react, it would have been from the larger zone inside of here, where more orders would have laid and a larger position would need to be mitigated. But gold doesn't always react perfectly. That's one thing that I don't like. Gold is rather unpredictable. All right, fair enough. We'll have to go back and have a look. I know Luke highlighted a zone yesterday, Sunday session, so just waiting for price to tap in and reject. Yeah, there is a very small buy to sell candle just inside of there, which I don't really like. When we see supply zone taps or demand zone taps that come to pretty much create a large area of liquidity, which we have done here, you know, between this level, so from here upwards, that is representing a very concentrated region of liquidity, which I never like to see price leaving that, but we can see that now as further confirmation in the long run, price should continue bullish. Nonetheless, we've had a reversal from there, break of structure, price came back up to react to a buy to sell, which was laying in that region. We had the reversal, break of structure, and then from now, I would ideally like to see a tap of this buy to sell at the region of 1793.5 in order to potentially find an entry. So that is the analysis there. Going back now to pound yen, let's see what's going on. Okay, there's a lot of hesitation in this area, which is good because it means that as we've tapped in, the institutions are hopefully looking to absorb the supply that was dominant. And we can see that since that absorption, price is showing some very nice signs of taking off to the upside. We are seeing some nice volume and spread in the bullish candles. But again, we do need to see a clear break of structure first before we can make any clear assumptions. But one question is, everybody in the chat right now, what are the main markets you are looking for in this coming week? What do you believe are some of the markets that you think look the best for opportunities or that you are looking to trade? But yeah, as of right now, just waiting for a potential break of structure on this market. If not, price will go to the downside. We will continue bearishness, in which case we then begin looking at other zones lower, looking for a slightly larger correctional wave. But this is promising because the buy candles are of high volume and spread, and we see the sell candles are very, very hesitant, very wicky. Just to elaborate further on that, it's just an indication that demand is strong and supply is struggling. That doesn't mean price will definitely reverse higher. Obviously, we've still not been delivered with a break of structure, which is necessary before even assuming that bullishness is emerging from this region. But I am liking the look of the fact that the institutions do seem to be very active here, I must say. Just seeing how the candles are being created every 30 seconds, 15 seconds is promising. It does appear as if we are still within the absorption process. And the reason why I know that is because if you watched the candles as we were coming down, every time they'd make a big move lower, they'd instantly be pushed back up. Now, what's that showing is that every time a lot of supply gets introduced into the market, the institutions are instantly absorbing that, which is evident by the fact that we have that instant push down and an instant push back up. And we can also see, since the major tap, we had a push higher. Price then came back down to react to a demand zone. Another push higher. Price comes back down to react to the last sell to buy. So it appears that demand is taking control. I'm hoping that we will see a push up here that will come to liquidate the high, deliver the breakup structure, and then we can start looking at positions. Now, if you wanted to be preemptive, you could arguably get involved straight after the break of structure. We would argue that we don't want to see price now penetrate that low, and therefore we'd have a stop loss just below that. Obviously, we'd look to partial at this high, and then we went through the take profit regions just before. I usually prefer, though, after delivered with a break structure, to try and find another set of the 3-box strategy. Now, that's exactly what we've been delivered in this region. We will sort of walk through why that is. So we've been delivered with 1, an impulsive wave, 2, the tap into a point of interest, and then 3, entry confirmation or clear reversal signs inside of that. So we can see we've had a clear level of liquidity built up inside of that region, liquidation of liquidity, and then from there we are getting close to delivering that break of structure. I'm looking at XAUUSD and Great British Pound US dollar, and what side of the market are you hoping to be on with both of those markets? Is it buy, sell on both of them? Is it different for both? Honestly, I'm no longer really liking the look of this setup just because of the hesitation now that we're seeing to the upside. Now, typically the institutions are very efficient. Like when they want to reverse a market, that process will happen pretty quickly. You know, we know that we've absorbed the supply because of this region here where this represents phase A and accumulation. After the liquidation, we've seen an instant reaction. Price pushes back up. We've then had the reaction to demand, and from there we should ideally have seen, you know, best case scenario, price then continue to take off, the break of structure delivered quite instantaneously as a result of the fact that at that point demand should definitely be in control. Now it seems that they have introduced some demand, yes, and tried to cause that reversal, but I'm getting early signs now that it just cannot be sustained, and a reversal may not be likely. Doesn't mean it won't happen. Again, I'm just saying it's slightly less likely to happen than what I originally thought. But I guess this is also a pretty valid time to ask you all, how's your trading year been? Now, the year of 2022, how has that served you in form of trading? You know, has it been a good year for you, a bad year for you? What are some of the things you've learned? I think it's very, very important at these times to recap. You know, now that we're coming up to the end of the annum, if we can sort of look back on that year and say, how's this year been for us? You know, can we say that since this time last year, have we progressed? Now, that doesn't mean progressed in terms of your trading account trajectory, because that is not a parameter within which we should always be looking to measure. You know, have you progressed as an individual? Has your trading psychology got better? Has your analysis of the markets got better? Have you got better at managing your risk, of safeguarding your equity? Have you grown more as an individual? Have you built better relationships with those around you? You know, being a good trader is not just about profiting. It is, obviously that is going to be one of the main constituents. If you're profitable longer term, you're obviously a good trader. But in the earlier stages of trying to develop yourself as a good trader, you know, it's a lot of character building, because being a good trader is more about controlling your mind as it is actively just performing analysis and executing trades. Now, if we can look back and say, well, over this last year, I've developed so much as an individual, you know, has your mindset got a lot better? Are you much more positive? Are you much more motivated? Are you now much better at controlling your emotions? All of this stuff, you know, think a bit more broadly and use a vaster range of parameters to try and judge that growth. Looking for shorter term buys in gold into the supply zone, then sell longer term. For Great British Pound US Dollar, I want to see structure break to the downside, then wait for the pullback in order to enter sells. Very, very good, very good. We can tell already that you've obviously got a very solid bias, which is great because it's obviously an indication that you have spent time performing a thorough analysis on the market so that you can build that bias, build that deep, in-depth story. I always like to see it as a book, you know, before we can execute trades, and therefore before we can talk about this book and try and round this book up, we must have read every single chapter. We cannot simply look at the back of the book, read the blurb, and try and give a detailed summary of what's happening in that book. Why? Well, that's because we've only seen a very small glimpse. We've only taken one look at that book and tried to summarize it and give a detailed prediction. Now, if we were to actually read and build every story of that book, every single chapter, and then predict or summarize a prediction of that market or book, obviously it's going to be much more detailed and much better. So rather than just taking a look at the market and instantly trying to execute a position, therefore looking at the blurb and trying to summarize that book, no, instead we want to spend time analyzing and reading that book, therefore spending time going through the market using a range of time frames. You know, look at each time frame as a different chapter of that book. You are providing yourself with more knowledge such that when it comes to making a prediction, you are much more well informed, and through adding more layers to your analysis, you are instantly adding more probability that you are correct. But yes, I believe that this festive period is a very good time to reflect and work on things, because the markets will slowly start to die off as we sort of enter the last week, the last 10 days of December. If you look at the fundamental calendars, we literally just have like barely any news coming. Obviously a lot of bank holidays, a lot of days where the markets are closed. So I wouldn't be expecting to find many opportunities in the market as we rear towards the end of the month and start of the new year. So that is really where we're going to spend time just reflecting, you know, reflecting on yourself, trying to develop yourself as an individual. As cliche as that sounds, it is very important because, as I said, there are so many constituents to a good trader rather than just analyzing a market correctly on a daily basis. There's been many traders I've seen that they'll go through streaks of profitability, but then instantly the second their mindset falls, that profitability loses. Now, everyone can be profitability for a short term. You know, when we're working with probability, which is exactly what trading is, there is literally a statistical chance that no matter how bad of a trader you are, you can go through a streak or a period where you win consecutively. Therefore, in your own mind, you're thinking, right, well, I'm a good trader. You know, I'm having this consecutive wins, this consecutive account growth. It's the sustainability of that longer term over years, not weeks, not months, but years, you know, sustaining profitability for years on end without really seeing any setbacks. That is when you're a good trader. So having that happen for years, for a long time, that is really where those vast, wider constituents come into play, where it's like, okay, probability can't be everything. You know, maybe this month we are profitable simply because of probability. Maybe longer term we don't actually have an edge. we need to trade for a long enough period of time so that we know that. And then on top of that, typically the factors which are going to limit, or the limiting factors within that longer term profitability, is solid risk management and pristine trading psychology. Those are your two limiting factors within long-term profitability. Nonetheless, we see that price has potentially now come to invalidate this setup. That's absolutely fine. As I said, there were a few red flags as we started to progress, which is why it's important not to be impulsive and really stick to your set list of rules, which is exactly what I've done here. I have been very strict with myself. I waited for the break of structure because that is exactly what I needed to see. In no form, in no way can I ever allow myself to enter without that break of structure being delivered. Now I can also analyze the candlesticks, the volume and spread of the candlesticks, the way in which they are created, as we did around this region about 10 minutes ago, and understand what's going on inside of there in terms of liquidity and volume. But now that's invalidated, obviously we then zoom out and say, right, well, price isn't getting ready to reverse there. That's absolutely fine. So what is it likely that price is going to do? Well, now that we've broken this low, the break of structure would now have to be seen here. So I always will put an alert at a protected swing, because any penetration of a protected swing can be relevant. But because we've invalidated that zone now, we zoom out, we say, right, well, okay, we do have a zone down here, which we'll set an alert at. It's not the greatest zone in the world, but honestly, with this market, it hasn't been reacting too nicely anyway. What I'm going to do is go to a higher time frame now to see if there's any clear higher time frame zones. This one down here, definitely still valid. If we look inside of structure on this time frame, I wouldn't say there's anything valid down here. That's mitigated. Okay. Yeah, so I would pretty much just say that we're just working within this. This sell to buy looks very, very nice. And then inside of here, honestly, I don't really see anything else relevant. Okay, potentially actually this sell to buy there. Let's just take a very quick and closer look inside of that, which is something we had identified before actually when we were doing a little bit of back testing. But I think no, we can defo identify this region as it does remain unmitigated. Okay, there we go. Yeah, so it goes back to being a waiting game now. That's absolutely fine. That's why it can be hard to not be impulsive, because obviously, like, we've been live now for an hour looking for opportunities. None have presented themselves, and when one got close, it's very easy to let those emotions take control and be impulsive, because you're like, finally an opportunity's come. We've been patient for so long for this to come, so let's just get involved, let's profit. No, that didn't happen. I wasn't delivered with everything I needed to be delivered with, even if that means having to wait longer, a few more hours, even if that means nothing gets delivered today. That is absolutely fine. Wildspurs, hey James, nice to see you trading live again. Much appreciated. It is good to be back, good to be analysing the markets and having conversations with you all. It is very nice being able to walk through the analysis like this. Like, sitting down and just doing it is one thing, but when you actually have to explain that analysis, which is what I'm trying to do constantly in this live stream, when I'm having to actively explain exactly what it is I'm doing, exactly what it is I'm looking for to an audience, it honestly makes it so much better, because it makes you think. Because when you're explaining things, you obviously have to explain it well, which obviously makes you sort of overthink things to a degree, and therefore add more depth. You looked at US oil recently. It was Luke, I believe, that was looking at US oil on the Sunday sessions. So if you have any questions about that analysis, I believe Luke may be in the chat. Are you there, Luke? Are you there at all? If so, he'll say hello. So if you've got any questions about that, you can ask him. If not, and you'd like me to take a look at the oil market, make sure to let me know. I'm more than happy to go and take a look at that market and see what my bias would be. Let's actually go into the Q&A, see if anyone else has answered that. Oh, I've been looking at trading oil, it says wild space. Yeah, I guess if a few people are talking about that, we can go have a browse. I actually haven't traded this market or looked at it in an extremely long time. I used to trade this quite a lot back in the day, but I haven't touched it in a long time. Okay, so full top-down analysis. Already we can just see that it doesn't really follow structural laws extremely well. Okay, I'm here. Yes, so Luke is here. If anybody has any questions for Luke, he's in the chat, so do feel free to conversate with him. Okay, anyway, let's just actually perform some proper analysis on this market. So we had a bullish run. Okay, we then broke to the downside. We had a bearish run. Now let's focus on this bearish run, whereas obviously we had this as an entire move lower. Yep, we've had impulse correction. We obviously had the break and liquidation of this high, which was representing a break of structure. But once that break of structure was delivered, we could have made the assumption that price wanted to remain bearish, in which case we maybe would have didn't actually analyze oil this weekend. We'll probably update the chats today though. No probs. Okay, but then also we would have wanted to look inside of here. Now at first glimpse the overall zone would have been this, but I can see a very small refined region using those wicks inside of there. Now let's just go back to the weekly just to look inside of there, see if that would be correct. Okay, well no, to be fair, as we've come into this, that's been mitigated. Okay, we do have that overall zone. Again, I think I'm getting too caught up here fractally. I was actually going to identify that, but it seems like price has already come to mitigate that, which it did fractally. That's definitely unmitigated there, but this has been mitigated as we come back up. That's been mitigated as we tap into there. I mean, the only zone I would argue is unmitigated then inside of this region would have to be that. I mean, the overall buy to sell probably starts from that region, but I'd probably just have to refine it to that. Although I would be quite hesitant to say that price wants to come up to that because of how much it would be getting close to creating an equal high. So that's absolutely fine. I'm just going to scrap that point of interest and say, yeah, price has traded up. It hasn't reacted to a supply zone, which is fine. You know, it doesn't have to every single time. I want to double check though that inside of here, this zone is valid. Yeah, we would have taken that to there. So it is unfortunate we didn't see the reversal from that, because we definitely would have liked to see that. Nonetheless, we had impulse correction, which came to tap into a valid zone. The new impulse, which came to liquidate the low. Yep, absolutely fine. And then we see liquidation. Price trades back up to a very relevant region as well, to a nice buy to sell candle, which is quite obviously identifiable. We then we liquidate the low once again, and then we reach COVID lows, which is just insane. I mean, anyone who's holding from COVID lows is profiting massively. The fact that we went to literally like zero, the way that this market crashed was insane. And then what we would have expected as we traded up was to see price reacting from some of these zones inside of here. There's a few different ones we could have reacted from. Price didn't do that. We had that break of structure. And honestly, I would argue that there's nothing above price now that we need to react to. So I would argue that any moves up now is new bullishness that should continue longer term. Now that would make sense considering that oil is obviously quite a precious material. It is finite, so we would expect the price of it to go up longer term. Okay, so now we're making an assumption that we are going to go bullish longer term. Let's look inside of here to try and identify the structure within which has been followed. And it is very aggressive, so it is going to be quite hard to identify. Honestly, the most valid region we look at is probably this as an impulse. I mean, looking inside of this, yes, we probably had a zone somewhere inside of there, which we did have an initial reaction from. And then we trade lower, mitigates, okay, we come down to there. Okay, well, maybe argue then that this here is the overall sell to buy. Let's go back to the weekly to see if that coincides on this time frame. Yep, the overall sell to buy is there. I'm also going to go down even lower to see how that looks on the lower time frames. Yep, there's definitely refined regions unmitigated inside of there, so I'm going to keep that overall zone. Absolutely fine. Now we see the price is holding within that. Okay, well, if price is going to reverse, let's look inside of this. I quite like the idea that we've got some liquidity built in the region. Now, obviously, longer term, we're going to have to see the penetration of this high as a break of structure, as confirmation that price, okay, we're getting some alerts going off, is making that longer term reversal. However, if we go lower and look inside of this, obviously we've had a major move, but if we follow bearishness, okay, impulse, correction, impulse, correction, impulse, correction, impulse. So technically, this in terms of fractal structure should be protected. Okay, so if we get the break of that level at alert, that's going to be quite relevant. Now, if we do see the break of that level, we then want to see price traders back down, tap us into a demand zone within which we would identify that little sell to buy point. So we'd want to see the break structure delivered, pull back into that zone, where we could then argue that we are seeing that longer term reversal. What I'm going to do, because we've potentially seen the tap already, just move that to there. Perfect. Just so we know it's tapped, but it doesn't clear up the screen too much. And then, of course, a higher time frame break structure would have to be delivered from here. So if we do see the break structure reaction from this, we do also have to be quite cautious that price could be delivering this just to come up and mitigate the supply zone up here. So if that is the case, obviously we're going to be quite wary if we do get involved in buys, because of the fact that we could quite simply just be delivering a correctional wave up to this point, which is absolutely fine. We would then just take positions from here with our take profit, or we would partial at this zone. But yeah, I guess the conclusion I've come to, again, from reading each chapter, reading every part of that book, is the fact that we are bullish longer term. We are going to continue bullish with no real parameters to work within longer term. So continual bullishness for as long as the foreseeable future can see. This is our most recent impulsive wave. We've had the correctional wave to tap into a major sell to buy. We're seeing some slight hesitation as we've entered that. As we then go to like the 1 hour time frame, we're seeing signs that price is curving off. We'd want to see the break of structure. We then want to see a pullback into a demand zone, trade up. Price could then, and we have to be aware of the fact, react to this supply zone. If so, it's still bearish and it still wants to go bearish longer term. But if we break this and we deliver a break of structure, we know that this bearishness is definitely coming to an end. So that is my oil analysis. I'm curious how many of you would agree with that, or if any of you believe that that is correct also. But yeah, nonetheless, that is what we're looking at. Now, I'm getting caught up. I need to actually go and check those alerts that pinged off for us. Okay, so gold. Okay, we've just come to penetrate the low. It's absolutely fine, which is good because that is further signs as well. Let's just remind ourselves of the bias. Yeah, okay. So we can now take this as a valid impulsive wave. So that impulse is no longer valid. We've already reacted from it. We've already broken structure to the downside, and therefore this becomes our new impulse. Perfect. That is still the correctional wave I want to see the reaction from. As we go to the 1 minute, let's just see if there's anything else we need to be aware of. Could potentially see a reaction to this zone here, although I wouldn't really like that because that would be a sign of a continuation of fractal structure rather than the continuation of higher time frame structure. But we can mark that on nonetheless. I wouldn't be getting involved in a position from that, as I do still want to wait for to tap into this higher time frame zone. The other thing that is obviously worth noting is if we did manage to find that entry at midday, which we went through and we back tested, we would have now hit a partial for, okay, we would have partialed at 87 pips, I believe, is that, or 870 pips, which is, okay, 870, our stop loss is 130, that's about 6.5 RR we would have partialed that, so 3.25 RR would likely be secured at that point, so quite a nice position. We would have been able to capitalize from there. Another further question though, does anybody have any markets they want me to take a look at, so on and so forth? I believe Australian dollar, US dollar also gave an alert. Yeah, that was to signify, yeah, we have gone to the downside, which is good, as it is signs that the market is reversing from this point. Now we just need to be aware of how we can look to potentially get involved from positions, which I think, did we go through and identify some zones? I believe we did. Okay. Right, fair enough, fair enough. I'm just in my mind processing all this, so okay, yeah, absolutely fine. We're just going to be waiting for those. Now that we've created new structure though, is there anything inside of there? Nothing obvious to me, nothing I'd really want to get involved from. Okay, so absolutely no problem. Yeah, it's now just going to be a waiting game, really, just to see some form of a pullback inside of this region to try and find an entry. So yeah, that's just going to be a waiting game on this market. Obviously, we don't really want to be getting involved whilst the impulsive wave is still being created. That would not be wise. So we have to start waiting for some breaks of structure to the upside and confirmation that a correctional wave is forming. Now, that's why I'll now set an alert at this point here. I'm going to continue following the protected high within the structure so that I know the second the protected high is broken, there is potentially a correctional wave incoming, and therefore an indication that we can start looking for entries. Again, if anyone has any markets you'd like me to take a look at, make sure to let me know. Let's see how pound yen is playing out since. Yep, we have made further moves lower. That is fine. That's technically still going to be the protected high, so we still want our alert set there. And yeah, we're heading towards this POI. So yeah, I quite like the analysis we have there. That is looking pretty good. But yeah, I mean, we've done a good hour there of market analysis. So I've done pretty much all the analysis I would have done by now. You know, I'd usually spend like 30 minutes to an hour doing my analysis, setting my alerts, and then it's just a case of doing other things whilst I'm waiting on those alerts to form. We've gone through a nice bit of analysis there. But if anyone has any further markets you'd like me to take a look at, any further questions you'd like to ask, then make sure to let me know. And if not, we'll probably look at rounding this up. What I probably will do though, as we are all here, is spend this time to do a little bit of plugging. So anyone in this chat that is not already subscribed to the channel, we would highly appreciate if you do that. Just because of the fact that we are really trying to grow the YouTube this year. You know, we've been putting a lot of time and effort into it. We've been trying to provide literally as much educational information there as possible, because I know a lot of people that you know, in the similar industry as we are and do have a YouTube channel. The majority of them provide the very bare minimum in terms of information and education, because they're using that to entice you in to then sell you courses, to then sell you extra things. Now, there's nothing wrong with people who sell courses, because I believe if you're getting into this realm, having a mentor and having somebody teaching you is the best way to go about it. The same way as if you go to university, you go to college, you're always going to have a professor or a teacher that teaches you and guides you. That is mandatory. It's needed when you are learning anything, to have that figure to guide you. So I do not have a problem with anybody who sees themselves as a mentor or sells courses and whatnot. I think it's about being humble enough to understand that, okay, if somebody doesn't want to purchase your course, I still believe that I have a obligation to provide them with as much information as necessary to ensure that they are not allowing themselves on the wrong path. So that is why this YouTube is so important to us, because of the fact that we're trying to provide as much proper educational information as possible, whilst going into enough depth so that that information carries weight, and carries enough weight such that the information can be used to help you avoid the mistakes and traps that do lie within this industry. But yeah, as I said, there's no more questions or anything like that. We'll probably look to wrap this up. We've gone through a nice bit of analysis there, a nice range of markets. So hence why I advise a lot of you to come and catch, if you're watching this in the lounge, come and catch these lives, because it is a lot of extra information that can help you quite massively in terms of understanding how we're looking to tackle those markets, and how you can look to do that yourself, really. But yeah, it seems like the stream's sort of dying off now. I'm sure people all have things they need to go and do, trades they need to place themselves. So thank you to everybody who has tuned in. It is very much appreciated. All the comments, everybody that comes in here and has a little chat, thank you very much. Everybody who's watching this in the Learning Lounge, if you're still watching, huge hats off to you. Leave in the comments right now if you're still here. If you're watching this back on YouTube, if you're watching this in the Learning Lounge, leave a comment right now saying oil. And every comment that we see with oil, I will give you a prize for the support and for watching for this long. So yeah, we're going to wrap this up. So thank you to everybody who's watched. Hope you all have a great trading day, and we will catch you here again for another live stream, I'm sure within the next few days. So yeah, have a great day everybody, and we will see you soon.